Let's put this in perspective. You go back and you look at GDP in 21, we ran 12 nominal GDP. Then we got 7 in 22. Then we slowed down in 23 to 5 and to what are we, 5? We're going to be 5.5-ish. I think this year you're going to slow to 4. This is not a classic. This was we ran too hot. The economy was running at 12 out of 10. Created inflation. Now I think we're getting back to a normalized economy. And I would say one thing that I would challenge about where the Fed is. Listen, I don't think the Fed's going in March. I've said that before. I think it's crazy. They can't move. I don't think they'll move that quickly. But I do think they'll get the long-term funds rate down. I do think it'll get closer to 2.5 to 3 over time. The question is, how long does it take to get there? Listen, I think, part of why I think you can start owning interest rates, this backup is great. The market got way too ahead of the Fed. Now you're backing up to levels that are starting to make some sense again. I'd love to see them pull back even a bit more. And I think when you think about where we're ultimately going, I think we're ultimately going to 2.5 to 3. It's a question of when we get there. I think they'll start cutting in May, June, and then I think they'll get there, with the 18 months, I wouldn't argue with that, but I think to a slightly lower trajectory consistent with potential growth being lower over the next couple of years.
So I like your narrative, which is follow us, jump in, and what you say is, look, I can have a bigger splash if I jump off a higher diving board. We've had a small retracement is how I would categorize it, 10, 12 bips. How much more of a backup in yields do you expect, and where is perhaps a better re-entry point on treasuries, first of all? We'll come to credit very quickly.
That's a great question. So I think, by the way, we've made a good move out in the belly of the curve, out to the 10-year point. I don't think we're that far away. Would you be really excited if you got another 15, 20 basis points? I think so. Could you add a little bit here? I think so. The front end of the yield curve, I still think is too high. I still think we got to price more out of the Fed moving in March. I think we have to price a bit more out of how many cuts the markets are anticipating for this year. But I think in that belly of the curve, you're getting, would you start to put some money to work here? Yeah, I think you can put a little bit of money to work here.